Glad to have you back. The consumer goods sectors climbed for the second largest to the largest contributor to market capitalization of the NGX, as all share index overtaking the industrials, but thanks to contributions from most valuable firm Boa Food PLC. The consumer goods sector alone makes up 23% of NGX ASI total market cap of 96.6 trillion naira. This is followed by telecommunications 21%, industrials 20%, banks 16%, oil and gas 8%, power 5%, and others 7%. That's according to data from Chapel Hill Denham. However, analyst at Chapel Hill Denham says that this leadership position masks significant concentration risk. Boa Foods, the NGX most valuable listed company at 12.4 trillion naira market cap, which sits within the consumer goods index. Excluding Boa Foods, the sector's market shares dropped 22.5% to 9.1%. That's according to Chapel Hill Denham's analyst. Well, my guest is Boluwatife Ishola. She is a consumer sector analyst with Chapel Hill Denham. It's the first time on the show. Boluwatife, thank you so much for joining. It's good to see you today.
Thank you for having me around. Glad to be here.
Yep. Well, let's look at the recovery of the consumer goods company first. And of course, how have they been able to manage the situation?
All right, so it's no longer news that in 2023 and 2024, we saw significant FX devaluation. In 2023, it was about 48%. In 2024, it was about 41%, and this weighed on their dollar-denominated liabilities as well as imported inputs. But we saw how resilient the sector was in that they passed down some of these prices to consumers, in order to cushion the effect of the FX losses. But they also, carried out product innovation in order to protect their volumes. And so we saw, despite this, crisis, they were still able to record revenue growth.
Well, it looks good. So one way or the other, this FX thing is paying off in some cases and all of that. Well, the long run is that it's doing well. Our currency is gathering that strength back. But the sustained interest of some international companies in this space is something that also, catches my attention. What do you think is responsible for that?
So I think it's fact about Nigeria. When it comes to consumer good products, you are looking at numbers, right? The fact that Nigeria is highly populated, projected to be over 400 million people in 2050. We have a very young demographic, right? And we have an increasing urbanization rate. And one thing to note about increasing urbanization rate is that the more people you have in the urban areas, the more demand you have for packaged goods. So when we look at these three factors together, you're looking at a country that has, an upward trajectory in terms of consumption growth. And this is what these multinationals are seeing as well. And they are committing themselves to the market, reinvesting billions of dollars and just saying that they are confident about the growth trajectory of the market.
That seems it's a good one, growth trajectory. And despite headwinds, revenue growth still remain resilient in this space. Is that part of this development you just talked about?
So, of course, so yes, revenue growth remained strong. And like I said before, due to, price increases, but, particularly also because they maintained the volumes. Because if you increase prices and volumes drop, then you're now having like a net negative situation. But they increased prices, right? But they also, came up with product innovation. For example, we saw UACN introduce small sizes of King Loaf bread. We saw Nestle introduce Golden One 3-in-1. We saw MB, just recently introduced 25 cl and 50 cl, PET packs for Multina. And all of this is just to create like a wider range of options for consumers to ensure that there's affordability still for the product and to protect the volumes. So that's the reason why we saw, revenue growth, remain strong. Price increases and protection of volumes.
Interesting. So, Bolu, before I go to Outlook, Bolu, I'm looking at that report right now as we are, charting, and operating expenses is also set to rise above inflation in 2026. I'd like you to shed more light around that.
All right. So, there have been years where the consumer goods sector were able to keep operating expenses below inflation, and that's usually good. But we're going to see a turnaround. We expect to see a turnaround in 2026. We believe that, we're past the survival phase. Now, 2023, 2024, and partly 2025, consumer goods companies were just trying to survive, just trying to get out of FX losses. But when we look at their books now, we'll see that we're already at the tail end of the recovery. After survival, the next thing is growth and investment. So that's what we expect to see in 2026. We're going to see companies, start to intensify on marketing, trying to get their products in the faces of consumers. We're also going to see them, expand distribution to get the products to consumers where they want it. We've already seen that start in 2025 already, with companies like Nestle that spent 2 times more on advertising in 9 months of this year compared to the same period last year. We've also seen Guinness, talk about or announce its expansion to the north, which is non-alcoholic offerings, in order to gather more volumes. So we've seen that start to happen in 2025, and we expect that, the other consumer companies will not just sit back and watch others, take up their market share. They will also come up with their own strategies, and these strategies would have some, spending backing them. So that's why we expect to see, operating expense rise in 2026.
Consumer goods sector has been the largest market capitalization on the NGX. That means their stocks will be a very good buy, really, at this time. Would you advise anyone to invest, really, in stocks of the consumer space?
No, so yes, definitely. The consumer goods sector is a defensive one. The fact is, people are always going to hit. You're always going to hit, no matter how much inflation, rises. People are still going to buy food. But one thing we should note is that we need to be realistic about our expectations, right? 2024, we expect, and investors or the market, they were confident that the market was going to recover. So they priced that in the rally. So we saw consumer goods company rallying above their performance, their financial performance in itself, right? We saw all of these things happen. We see their price to earnings ratio and EV and to EBITDA ratio, show that, investors are priced in this valuation. So it's one thing to invest in the consumer goods sector. Like I said, the Nigeria consumption growth story is one that has an upward trajectory, right? So yes, invest in the consumer goods sector, but we need to be realistic that this is for the long term. Right, this is long term. Next year, we're not going to see any, exceptional performance, except there are positive surprises, which we welcome, right? But we're going to see steady growth. That is, the consumer goods sector is known for. There are some near-term catalysts that we should expect to cause a rally in the market. One is the release of the full-year earnings results. Q4 is usually the strongest for the consumer goods sector due to the festivities, and so market is expecting impressive performances. Impressive performance for the full-year earnings. We also, expect to see dividend announcements, but that would come in for full year 2026, announced in 2027. So this near-term catalyst, is supposed to propel the names, the stocks in the market. However, some downside risks exist that we must be aware of. Like I said, we need to be realistic. One of the things to take note of is that next year is a pre-election year. And with pre-election years, we usually see, demand pressures on the dollar. Due to political spending, also due to capital flight, as foreign investors are thinking, what's going to happen? Let's exit first and come back later. So if there is demand on the dollar, we may see us go back to an FX devaluation situation again. However, I believe that, since the recent FX devaluation, I believe that consumer goods companies are, better equipped and positioned to handle it this time. But that is a risk that persists. Now, if we're going to be positive about it and say that, FX is going to, be stable, remain stable, and it's going to appreciate, then another risk exists. That means that imported food, like imported goods, would now become competitive in the market again, now competing with the local producers, taking part of the market share. So these are the things that we must take note of and balance out. But we do believe that, there's still room for appreciation in consumer goods names. However, it might be subdued because of this, risk and the fact that the market has priced in the recovery completely.
Well, you took that ahead. I was waiting to ask you about the downside risks, but thank you so much, Bolu, for that. So what's the outlook now for the sector in your report and your understanding?
So for 2026, what we expect to see is volume growth. That is the focus. That is what we think is going to be the focus for 2026, not necessarily price increases. If there will be any price increases at all, it will most likely not be one that will put significant pressure on the consumers. So when we talk about volume growth, it means that we're going to have to see a lot more product innovation. It means we're also going to have to see capex expansion. And, that will only, take place. Those kind of things will only take place when borrowing costs are low. So we expect to see those kind of things happen next year, because we expect the MPC to take a dovish tilt next year, which will lower borrowing costs, which will then support capex. So volume growth is the focus for 2026. They are going to push volume. They are going to be in our faces. They're going to tell us, buy our product. In fact, we have 5 varieties now. We have 6. It comes in different sizes just to ensure that there is much volume recorded.
Interesting stuff. I must say that dovish expectations from the MPC is one that everyone is looking forward to. And that meeting is in February. Let's see how well that plays out. Well, interesting stuff, I must say. When recovery is well on the way, several catalysts could also trigger further upsides over the next 6 to 12 months. Tell us about some near-term catalysts as we wrap this up.
All right. First on the list, performance, full year earnings. That's the first thing on the list. When results are released in late January, early February, market will rally. But I must say that, again, investors are usually forward-looking. So we've seen in recent days that there are investors that are already positioning for this rally. Like say, last week and this week, we've seen a name like Guinness gain 10% on a daily basis. Investors positioning for the rally and expected strong results. We've seen appreciation in names like Nestle as well. We've seen appreciation in names like UACN. Just investors saying, we know that the performance is going to be good, and before every other person in the market catches up with it, let me take my position. So when we see full year earnings, that should be a propellant for a rally in the market. Also, dividend expectations. We expect to see names like Nestle, NB, and Guinness, announce dividend for full year 2026. There might as well be some positive surprises in the market. I mean, the market always welcomes positive surprises. So if we do see that, that's something that could, be a catalyst for the market as well. And like you said, and like we mentioned before, the MPC rate cuts. If we see something substantial enough, because consumer management and consumer companies will say that at this level, the 50 basis point rate cut was not enough, to change the narrative for them. So if we see something substantial next year, then we might see, these names come into the capital markets, or just go to the banks to borrow money and expand production lines. So those are catalysts. I know when that happens, when there is capex growth, market is expecting much more volume, and then that causes a rally as well. So those are the near-term catalysts over the next 6 to 12 months that we expect to see, cause positive performance in the market.
Boluwatife Ishola, nice conversation with you, I must say. Thank you so very much for joining the program. Consumer Sector Analyst, Chapel Hill, Durham. Hope to see you again soon, and compliments of the season.
Same to you, sir. Thank you.
All right, then.